Today wasn't the worst day we've had in the last couple of weeks, but it wasn't necessarily bullish either. We ended the day down 0.76%, and the candle, honestly, the daily candle doesn't indicate which way we're going to move tomorrow. I'm going to walk through my charts step by step, starting here in the 1 minute, and shout out to Dimitri Karnizis for commenting first. Alright, starting with this dip yesterday and the run that followed, we saw a pennant form this morning. This was a consolidation pattern, and you can see that the implied volatility during this time is decreasing. This is typical while the price consolidates. The price moves up and implied volatility continues to drop. This is exactly what I expected to see. And yesterday I said that I would wait to enter into new positions until I saw the implied volatility climb. And I didn't really see that today, but I did enter into some positions, and I'll talk about that later. Now, what's cool about this following price action from that pennant is there's actually a half-staff tilted flag in here. Can you find it? Probably not. The flag is one of the most misunderstood chart patterns within the ape community. What a flag is two parallel lines occurring at a top of a flagpole. Like you see here, we see a big move up, big decisive move up that passes through a level of resistance. Here, that technical level of resistance was a 70% retracement from the first leg of the measured move down yesterday at $28.33. So the price moves above that level and then forms this half-staff tilted flag, and we continue to see a move upward of about the same height. This is picture perfect in terms of bull flag scenarios. You can see here that the price did come very close to that similar amplitude of height. This is a flag. Now the price broke down when it reached above $30. The price was not comfortable at that point, and there was a retracement. And what's cool here is this almost looks like another consolidation pattern right there. The price rose and broke out of that pennant, failed though, and continued to fall afterwards. The price moves down below the $29 level, and you can see that there's almost this pipe bottom formation between these two candles. This was an opportunity for the bulls to come in and turn the price around. You can see though that the implied volatility at this time is beginning to increase as the price is dropping. Implied volatility is confirming here that the price will head further down. Now the price does start to climb and recover back up to that $29 level, and the implied volatility sags, so this is to be expected. There was an opportunity here for the bulls to break out above this level, but the RSI petered out before it even reached 70. When the RSI fails to rise and actually touch that overbought level, alright, that can't bode well for bulls. And the price sank accordingly. Shrink this down a little bit, move over. And then the price started trading in this range. And towards the end of the day, we started to see a run. And this wasn't a very healthy run, it really wasn't. Let's talk about what the RSI looked like during that time. You can see here the RSI reached into the overbought level 3 different times, maybe even 4 different times, but the price made marginal steps higher each time, failing to set a clear, definitive breakout through the level of resistance at $30. And this was a very good clue that we weren't going to head any higher today. Of course, the price moves back and forth. It's kind of just listing up here. It's not comfortable, and eventually we see the sell-off occur. And we almost found support at the 28.33 level, just above there, around 28.50, and then we finished the day on some green candles, which is nice. And you can see that the volume picked up here as well. This yellow line on my volume, this is the 30-period average. So here, this would be the half-hour average in volume, and you can see that it picked up towards the end of the day, providing support. This is my 15-minute chart. This is where I do the majority of my charting. And you'll see that I have a note here saying that we're in an ascending broadening formation with a 65% probability of an upward breakout. That's per Volkowski's analysis, and I have his website pulled up here on the right. Right now the page is on pennants, but I'll show you what I'm talking about. You'll get these little stats from Volkowski. The breakout for pennant is upward 57% of the time. That's not very much. Now getting back to this 15-minute chart, in yellow, I have what's called an ascending broadening formation. The top level is flat and the bottom level is descending at a pretty good angle. Let's see what that is. It's about 18%. I was looking at this today and I thought that I might need to make a revision, and that is to bring this top trend line down to $30. Whoa! That would put these touch points outside of that line, and that's true, it would. But for the sake of clarity, I'm going to leave it up here. This is where it's the cleanest. And I think this is the best way to interpret the chart. Yesterday I was talking about a partial rise where the price fails to reach the top level of the pattern, and that is what we saw. And it gets worse. It wasn't even that the pattern failed to get up to that level once, it's that it failed to do it twice. This makes a double top. It is not looking bullish. It is really not. And every day that passes without an upward breakout, the price target on the bottom decreases because the breakout price is calculated from this lower trend line, which decreases every single day. As you can see today, the high end of that trend line was at 25. Tomorrow it's at 24.50. That means tomorrow we really could see a dump into the low 20s. That could happen. The bulls definitely did not step up to the plate today. They did not show up swinging. This would be our volume. And yesterday I drew this line. I didn't edit or change this line one bit. And you can see that the price is following this descent, which means this pattern is not yet played out. I do anticipate seeing some big volume to the downside and watching implied volatility rise at that point. And you can see here that the price did rise as the price dropped towards the end of the day today. The implied volatility is in a general uptrend, and I expect this to continue. Again, I really should be waiting to place trades until I see the implied volatility make an appreciable move upward. Today I didn't do that, and you'll see that in my positions when I go over that towards the end of the video. So that's what I have on the 15-minute chart. Looks like a double top. I think that the broadening formation is going to break out to the downside, and we're going to be in the low 20s or hit 20 even this week. That is just realistically what can happen. Looking at the one-day chart now, there really isn't much solace for the bulls. The price has plummeted, and now we have failed to see a recovery bounce. It is a new week, and we did not see the recovery bounce. Instead, we have this wishy-washy candle with a really tall wick and a long tail and a relatively shorter body. What this means is that tomorrow is completely in the air. Look at the RSI. It is flimsy at best. In fact, I wouldn't be surprised to see this reach back down into oversold tomorrow. That would be very likely. Either that or it's going to be a big rip up, and it won't go that high in one day, but it might be a big rip up. I doubt it though. I am prepared for that should it happen, but I am trading to the downside right now, and currently my bias is bearish. Implied volatility is still eking its way up in an uptrend. Wow, that really became more exaggerated as I increased its size, didn't it? But I do think that there is more potential to see the implied volatility drop. This would be a rise in the price. And it is possible that the price rises to 35 before finding more downside. So I wouldn't even be overly optimistic until I see that $35 price range exceeded. My weekly chart shows a descending triangle, and currently the price is just flirting with that bottom support level at $28. Look at that. That is scary. All right, if you're a bull and you're hoping to see a big move this week to the upside, and this is what Monday looked like, I would be concerned. This doesn't look like a bullish bounce. It doesn't even look like a bottom. The height of this candle is too tall to be a doji, and we have the rest of the week to finish it out too. Really, I should be calculating the lower price target for this descending triangle. And should we see a breakout to the downside, I'll do that and I'll update accordingly. Now, taking a step aside, here is the trading that I did today. So I closed several positions, mostly December 17th puts, but there was a call in there, and also a January 7th $50 call. I was down 30% when I decided to make these sales, and I did this in order to just cut my losses and regain my cash position. And so should we see a bullish reversal tomorrow or later this week, I'll be in a position to ride that wave by buying calls. But for the time being, my open position features puts at $26, $20, and $15, and these all have expiries this week, this Friday. So if there isn't a big move tomorrow, these get closed out, hopefully not at a loss. Now, currently, these positions are down 28%, and that's not too bad. And I just wanted to share what my positions were for transparency, one, and second, because this is my journal, and it's important for me to keep track of this, and sharing it also makes me accountable for my losses as well as my gains. So that's what I have for today's video. Let me know what you think, what's going to happen next, and thanks for watching.